I think the largest one is that it's not entrepreneurial, that it's run by state-owned enterprises when it's become incredibly entrepreneurial in just a short period of time. And then the other biggest misconception is that it's an economy dominated by investment and manufacturing of cheap stuff, whereas now it's become a consumer-led economy like the United States. Actually, I think the biggest risk right now is from what's going to come out of Washington. There's a lot of talk, as you know, about Donald Trump wanting to start a trade war with China. But I think that's probably overblown. I think it's highly unlikely that President Trump is going to take the risk to disrupt the boom in the U.S. stock market by starting a trade war with America's biggest trading partner. So I think that's probably overblown, but it's probably also at the top of most investors' minds right now. Yeah, it's gone both ways. So obviously during the campaign and even for many years before that here in New York, he spoke in pretty harsh terms about China, yet didn't do anything to disrupt China trade last year. At the same time, he talks about the great relationship that he's built with Xi Jinping. So I think that the issue of disrupting the stock market, the fact that Chinese would respond to a trade war in a way that might be detrimental to soybean farmers in the Midwest, where he needs to retain Republicans in the House, means that probably he's going to announce some measures which will have only a minor impact on the Chinese economy. Therefore, the Chinese response will be minor, but the rhetoric will be supercharged. I think you'd be hard-pressed to find a single economist who would agree that a bilateral trade deficit is the way to judge the success of the trading relationship. What we know is that when the U.S. economy is booming, we buy more stuff, we import more stuff, the trade deficit's going to go up. It's not a way to measure success. A better way to look at it is that since China joined the WTO just over 15 years ago, U.S. exports to China have grown by 500%. Compare that to 100% growth to the rest of the world. We now see that GM sells more cars in China than it does in the U.S. Boeing delivers more aircraft in China than in the U.S. It's become the biggest market for U.S. agriculture. It's really been good for a lot of American companies and workers. I think things should be pretty stable. We have to be realistic, though, that on average, every year, every part of the Chinese economy is going to grow a little bit more slowly. But that's okay. It's still going to be one of the fastest growing economies in the world. And for us as investors at Matthews Asia, we're really focused on the consumer and services part of the economy, investing in Chinese companies selling goods and services to Chinese people.